Very frequently, we get the question from founders of whether it's worth it for them to join an accelerator. Our advice is look at the numbers and do the math. Most programs follow a very similar pattern. They provide you with curriculum, with certain benefits, and with starting initial capital in exchange for set equity. The way that you should calculate that investment is very simple. If right now, as a founder, you have a term sheet for more capital at better terms that are available to you, you should probably take the money. But if you don't have a term sheet on the table that is signed by an investor, then you need to start doing a little bit of math. For example, most accelerator programs have the ability to negotiate really significant rate discounts and benefits from cloud infrastructure providers, legal providers that you as yourself as a startup would not be able to get. So if you have a piece of software that requires quite a bit of compute, you're going to be spending quite a lot on Microsoft, on Amazon, on Google Cloud, or other providers. So you have to think about the benefits that you're getting from the program as a way to materially reduce your burn. Now, if you're getting $10, $20, $30, $40, $100,000 in cloud compute benefits as part of this program, that is money that you don't have to go fundraising for. In addition, a really good way to think about the benefits of the program are the network effects of other companies and founders that are affiliated with that program. If you are a company that sells, for example, software development tools, it is very likely that your cost of sales are going to be much lower. Founders that are part of communities tend to be much more receptive to other companies selling to them from within that community. So all of a sudden, you're going from a piece of equity that you're giving to the accelerator in exchange for a little bit of cash to now a material reduction in burn because your infrastructure is cheaper, your legal services are cheaper or materially deferred, and your cost of sales goes down. When you actually do the math, that investment becomes extremely attractive. And we really recommend that all founders go through the process of doing the math and seeing if it's right for them. Accelerator programs can be beneficial to companies of various stages. If you are very early on in your product building process, you can leverage the resources of the experts and the network within that accelerator to help you create your product. For example, you can find senior technical support to help you with software architecture. You can find folks that can help you set up your offshore manufacturing if you're creating hardware. On the other side, if you are at a point where you have a product and you have a couple of customers, accelerators are a great way to help you graduate into an actively selling organization by leveraging the network of mentors, experts, and other founders that the accelerator has, as well as teaching you the skills on how to retain and grow your professional sales force. The most valuable takeaway that founders get from accelerators, without a doubt, is not the capital, is not the network, it is their peer group. Entrepreneurship is a lonely sport, and as a founder, you're responsible for taking care of your customers, for taking care of your employees, for fundraising, for setting the vision, and having others that are going through this process with you, others who are in the trenches with you, is extremely helpful. These are connections that will last a lifetime, and you will inevitably build great businesses. During your time in an accelerator program, you're going to have an opportunity to meet investors, business leaders, folks in your community that are passionate about technology. My recommendation, pick 2 to 3 of them and ask them to spend material time with you. Don't necessarily focus on product experts or experts in your field. Focus on people that want to invest their time in you as an entrepreneur and believe in you and your team's vision in the long term. The best way to find investors to work with your company is to find companies that you aspire to become that are near your market. So you go on Crunchbase, you go on CB Insights, you go on other available tools, and you see who are the investors of those companies. You reach out to them and say, I've seen that you've invested in this type of company. We have a complementary solution in the market, and we believe we fit your investment thesis. It is very important to only focus on the investors that are going to write the appropriate size check and that look at the type of companies that you're fundraising for. Otherwise, you're going to waste each other's time. Do not get discouraged if you get a no from an investor or from an accelerator program. There are an absolute ton of companies that get the check on the second or third try. There are a ton of well-known entrepreneurs that have gotten door slammed into their faces. If you go on one of my favorite websites in the world, the Bessemer Anti-Portfolio page, you can see all of the incredible companies that they've passed on and wear that proudly. Continue iterating and continue sending your message.